Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tigre from the IndependentSpeculator.com. He's speaking to us from Puerto Rico. Welcome back to the show, Lobo.
Glad to be back on the show, Jim.
Are you concerned with the reaction around the world on their stock markets to Donald Trump's furthering trade war with China?
I can't say I'm unconcerned, but being a resource investor and being a precious metals bull, I'm relatively unconcerned. I'm actually, my sense of anxiety isn't, is everything going to go to heck in a handbasket? My sense of anxiety is, where's the bottom? Where is the buying opportunity? I know that we're going to see extreme volatility, and I know that can cause assets that shouldn't go down to go down just because everybody's worried and things are tanking. But that creates great buying opportunities. So the stress isn't, oh my gosh, the world is ending. The stress is, oh my gosh, look at these opportunities. But is it time to buy yet?
Was it what I call the average investor, the public, who panicked here and decided to sell off their FANG stocks and so on, even though they really shouldn't be affected by tariffs?
Not directly, though. Actually, Netflix was up today, and Amazon is still doing well. Tesla was down, but it had more Tesla-specific news. So I'm not sure that's quite the case, but the broader market sell-off, I think it's reasonable on a number of bases. Who knows how many companies can be hit. We've got tit-for-tat retaliations going on, and we don't know what the Chinese retaliation will be to the current U.S. steps. And Trump's already said if they retaliate, we'll retaliate more. So it's reasonable for market participants to be concerned. You know, nobody really knows exactly what's going to get hit. And that said, the sort of the bigger picture of tariffs is that the net result is to increase prices. If you put tariffs on products you're importing, then that's great for the domestic importers. But why do they need those tariffs? If they can't compete, that means their prices are higher. So that means the domestic purchasers are going to be paying higher prices. And that happens on both sides of the dispute. So the net result, whatever the intention is, whether you're trying to make things more fair or to get concessions or to get the Chinese to stop stealing intellectual property or whatever the goal is, we don't know how that will play out. We do know that things will get more expensive. That's a break on the economy. And in a broad sort of way, you could see that as negative for commodities, which is near and dear to our heart. But precious metals aren't commodities like pork bellies or coffee or something. They're a safe haven asset. They're monetary metals. These are very different critters. So when I see them selling off with everything else, a knee-jerk reaction and the baby going out the window with the bathwater, I want to get out there and catch the baby because I still see value there.
So how is gold doing, and what do you think it's going to do?
There's the question everybody wants to ask, and nobody can answer completely honestly without pre-veracitation. So my basic answer is I don't know. I found it very interesting that gold rebounded today significantly from what was a real waterfall-looking stock chart at the open. It was quite interesting to see gold go into a free fall. And being a new entrant to the market, I guess I should say that, at the IndependentSpeculator.com, it's my new publication. I've gone independent only a few weeks ago, and I'm buying. I'm a shopper. I was prevented from buying stocks that I like and I believe they have a great future, almost regardless of what happens to these fluctuations along the way. But I couldn't buy them before, and now I can. So I'm happy to see this volatility. I was prevented from buying before, so now I see great opportunities to get in, have the market come to me on the prices I want on my favorite stocks. So hence my stress about where's the bottom and that sort of thing. What do I think is going to happen next? Honest answer, I don't know. There is, I think, a real danger that we could be at the beginning of a 2008 style, not single event, but cascade of events. All the crazy things the governments around the world have done since 2008, how many of those fixes are solid? How many of those are actually fixes versus just kicking the problem down the road? So if we have a big correction, if the tip-off today is just part of the ongoing rounds with the trade war, and if that causes a serious correction on Wall Street and other markets around the world were hit even more than Wall Street today, if that starts a big rout, things that are fragile, things that weren't really fixed could come undone again, and we could see follow-on consequences that would make this a major, major event like 2008, possibly even worse. I'm not predicting that. I'm not saying that's going to happen. I'm saying that is a very real possibility, and that's something that anybody in the market needs to look for today. So I see great bargains now, and I'm chomping at the bit to buy, but I'm not going all in now because I think there's a non-zero chance. That's kind of waffling. Let's say I think there's a significant chance of much better prices ahead. And if that doesn't happen, I am cautiously buying things that look to be undervalued as is, and that I believe will deliver value in the future. That's how I play it. I'm not timing it. I'm looking for value.
Right. So with gold, you have three choices, really: bullion, gold miners, gold stocks. What do you pick?
Well, you're right. Those are three choices, ways of viewing it. But my mentor, Doug Casey, taught me of one basic division, which I always keep in mind. I think he's spot on, 100% right, and it's important for investors to keep this in mind. And that is, gold itself is very different from gold equities and other derivatives. Gold is not a speculation. Gold is not something I buy because I think it will go up. Not the metal itself. I happen to think it will go up, but that's not why I buy it. I buy it because it is gold. And come heck or high water, if something ever happens, it's the ultimate form of wealth preservation and liquidity in time of need. And I've actually had that happen to me before. I've been in time of dire need where my bullion was the one thing that saved me. So that's how I encourage everybody to think of the precious metals. And a beautiful thing about putting savings and putting wealth stocked away in precious metals is that it's not the same as having a savings account in a bank. These days savings accounts, they're linked to your checking account. You can move money back and forth with, so easily. It's hard to really do that with gold, and especially if you own the physical bullion. You've got this beautiful eagle there, or a maple leaf, or I like the Canadian wolves, of course. If you're going to sell that, it hurts, and that helps. It helps you to hold on to your savings when you have them in bullion. So, gold itself is something that I own for prudence. It's for wealth protection, but it is volatile. It goes up, it goes down, and the equities can add leverage to those movements, and those are worth speculating on. The bigger companies are the sort of safer way to play that, though there really is no completely safe way. Even big companies in a big, crash like we saw in 2008. Techcominco sold off 95% in 2008. So if a company that big can drop that far, it's not really realistic to say that anything in the resource sector at all is completely safe. But those are the relatively safer way to play the movements, and you can add leverage to whatever gold or silver or the underlying metal does, owning the big producers. But of course, many of us are looking not just to protect wealth or to get a little leverage. We want to make money. We want to make serious money. And that requires speculation on the smaller, more volatile companies. So yeah, I have a shopping list of those. I'm particularly looking for precious metals plays, and also the new energy paradigm is, I think, very, very bullish for a number of other metals. And by the way, even if the economy does go into a tailspin, even if things are tough for a while, I think economic hard times are actually good when somebody has a better mousetrap. And some of the new technologies being essential to this new energy paradigm we're shifting into are a better mousetrap. I mean, if you could, if you could get financing for your Tesla roof and recharge your electric car for free at a time when people are tightening belts, who wouldn't want to do that? So I would not at all say, well, gee, if there's going to be economic hard times, that's going to be bad for all commodities across the board. Maybe in a knee-jerk way at first, that might be true. But that could actually drive the very demand that pushes these new energy commodities higher.
We'll have more with Lobo Tigre right after the break.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're chatting with Lobo Tigre. Lobo, is uranium making a comeback finally?
The price has ticked up, but the big question here, and the one that I don't think anybody can credibly answer with definitive, yes, this is the fact, is whether Japan is done selling. Because it's not Japan. It's not like a government program where we're going to liquidate our stockpiles by X percent. It's various private parties and public entities in Japan in the marketplace. And since the restarts there are going slow, but even if they accelerated, they have huge stockpiles they don't need, and they have been liquidating those into the market at below cost of production prices. We don't know if that's done yet. So I'm encouraged that uranium has popped up. It's popped up more than the last couple spikes, but we've seen several spikes like this only to have more secondary supply dropped on the market and drop the price again. So I want to see this one sustained a little bit, and I'm perfectly willing to miss the bottom here rather than try to get in early. I would rather get in with a much higher probability of success. If this rally maintains, if it goes up, say it goes up all the way to $30, that would be different from past spikes. And yes, the big gains from the very bottom, I will miss those. But if it goes up that high and it's showing strength, then I think that will be much stronger evidence that the Japanese have stopped selling, that we're into the new bull market, and there will still be plenty of money to be made, because even at $30, that's still below the cost of production. We need to see $40 to $60 uranium for that to make any sense anymore. And the demand is still there. Apart from Japan, the Chinese are still building scores of reactors. Germany wants to do without nuclear power, but solar panels in Germany aren't so easy to work very well. There's a lot of verbiage out there, but the bottom line is that nuclear energy is stable baseload power that cannot be easily or quickly replaced. And it's not going to be mined at current prices. So yes, I am a uranium bull. I'm just waiting to be more certain that the Japanese have stopped selling before I have some favorite stocks that I'm ready to jump into when I'm sure that, or more sure that it's time to buy.
What other metals are you most bullish on?
Well, I am very bullish on uranium, but I have to say again, it could be a while. So I'm not just about to pull the trigger. I'm very specifically looking for more of an all-clear signal for uranium. Moving on from there, I think there are others where supply constraints are very much baked in the cake, and we are going to see higher prices almost regardless of what the world economy does. I mean, absent an absolute stopping of the engines of progress, I think we're going to see much higher copper prices. I think we're going to see much higher nickel prices. And yes, even though cobalt has had a great run and it's pulled back lately, I think we're going to see higher cobalt prices. All three of those are essential to the new energy story, but they're also industrial minerals that are used in other applications. And all three of them are facing serious supply deficit for years to come.
I know everybody keeps looking at silver because it's unique in that it's a precious metal, but it's also an industrial metal. And with the way it's consumed, especially for solar projects, people keep expecting the price to go up. Why hasn't it?
You're right, and I am bullish on silver. Because it answers to two masters, right? Instead of having sort of one center of gravity that pulls it one way or the other, it has two. It's more like instead of trying to predict the path of a bowling ball, say, or any other ball, golf ball, rolling along, it's more like an American football or a rugby ball, right? It's got those points, it's got those weirdnesses, and it can just suddenly go point off in an unexpected direction. And that's because it is both a precious and an industrial metal. And it absolutely is part of the new energy paradigm. People keep focusing on lithium and all the things that go into the batteries. But the other side of that equation is the solar panels. And that technology still uses a lot of silver. And so that's very bullish. But on the other hand, silver, famously is inelastic. It doesn't respond to supply and demand constraints as much as other metals because most silver is a byproduct. Most of the silver produced in the world comes from copper mines. So if copper prices are down, even if silver prices are up, those people are not going to produce more silver. Yeah, that's great for the silver primary producers, but there are relatively few of those. But for that reason, those few are definitely on my shopping list.
We'll have more with Lobo Tigre right after this.
Vadic Ventures Corp is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vadic's management has extensive potash exploration and development experience in Thailand. Vadic will have marketing advantage compared to Western producers. Drill program commences this spring. Vadic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vadicventures.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Lobo Tigre. Lobo, do you think if relations with North Korea are normalized, will there be a wealth of rare minerals and so on there for people to exploit?
Interesting that you bring that up, Jim, because we've seen this before. If you recall, when things started simmering down in Afghanistan, there was a USGS report that said there could be trillions of dollars of mineral wealth in Afghanistan. Those are very silly numbers. I mean, there could be anything. There could be trillions of dollars. There could be $1. There could be negative trillions if the cost of extraction exceeds the value of what might be there. So, in the first place, it's silly to talk about what might be there. Of course, there might be wealth to exploit in North Korea. But mining isn't about what might be. It's about what you can measure, define, prove to a bank's satisfaction to get the loan you need to build your mine, which is a very different critter. And then there's the actual business of mining, which is impacted by many other things besides the existence of the mineral. You need rule of law. You need to be able to have contracts enforced. You need to be able to hire and fire employees. You need to be able to find trained employees. You need to be able to bring in qualified employees if there aren't any locally. You need roads. You need power. You need so many things that are at best question marks in North Korea that it is, I think, at best irresponsible to try to put out a number on the value of what is there, if not actually, somewhat deceitful. It's a big red flag in my view. Someday that might happen, but North Korea has so much work to do before any reasonable mining could happen there by Western investors at any rate, that it's totally premature.
Who wants to be in prison for life because you moved a poster around in the company lunchroom?
That's right. I mean, we are talking about a regime that periodically arrests tourists for no known reason. So, sure, is it a contrarian play? Yeah, but the idea of being a contrarian isn't just to do the opposite of what everybody else does. The idea of being a contrarian is to do what you know is right, regardless of what the masses say. So it still needs to be a good idea.
Lobo, anything else you wanted to kick in today?
I just want to add again that I am excited about the volatility we see in markets. And when volatility of broader markets hits safe haven assets, to me that's a flare going up saying it's time to look for buying, because safe haven assets should go up when volatility goes up. If they don't, there's a disconnect, there's something else going on, and usually that means there's a buying opportunity. So I encourage folks to stop by my website, sign up, and they can see what I'm looking and what's on my shopping list.
Lobo, thanks a lot for chatting with us.
Thank you, Jim. Always fun.
I've been speaking with Lobo Tigre from the IndependentSpeculator.com. He was speaking to us from Puerto Rico. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests, like Lobo, can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.